Hey everyone, welcome back to my channel. It's Nasdaq with Arshia. In this video, we're going to be going over quickly 40 must-know and must-have terms of the stock market for beginners. Before we begin, I'm just going to speak a little bit of what I like to call legalese. So disclaimer, I'm not a financial advisor and I highly suggest doing your own research before taking part in any investment scheme. Woo! Now that's out of the way, let's get started. Alright, so the first terms are really simple. So the first term is buy, number one. It means to take a position or to buy shares in a company. Pretty simple. And also sell, this one's also pretty simple. Getting rid of the shares that you purchased, either because you've achieved your goal or you want to cut down your losses. So like if a stock is like you have a share inside a stock, and if it's dropping, and it's going to drop more, you want to sell it before you incur more loss. That's just a general rule of thumb. And the third term is bid. So your bid is what you're willing to pay for a stock, the price you will pay for a stock. And number four is ask. So ask, on the other hand, is what people selling stocks are looking to get for their shares. So another one is bid-ask spread. So the bid-ask spread is the difference between what people have to spend and what people want to get. So the spread must be resolved before the transaction can take place. So another one of these terms is bull market. So bull market is a market condition that means stock prices are expected to rise. It's really good. Like if you buy before a bull market, it's good. Number 7, bear market. A bear market is bad. A bear market is one in which investors expect stock prices to fall. This is where like short sellers shine. Like you want to start selling them off. Number 8, limit order. Was it 8? Yeah, it's 8. So limit order. A limit order provides instructions to only execute at or under a purchase price or at above a sales price. Always use like limit orders, not market orders. And we're going to talk about market orders on number 9. Market order provides instruction to execute as quickly as possible a transaction at the present or market price. It says that don't use market orders. Like, I generally think that you shouldn't use market orders. All right. Another one, good till canceled order, or GTC. So a GTC order means that your order stands until you cancel it, and it will be executed whenever the stock comes to your price, even if it's 2 to 3 weeks down the road. Like if you, for example, are waiting for a stock to come down so you can buy it, that's good till canceled. So day order, another thing that's day order. Day order means that your order is only good for the day when it's placed. And this one's number 12, volatility. Yikes, this is common. Volatility is simply how fast the stock moves up and down. In today's times, the coronavirus times, the stock market is very volatile. It moves up and then down, up, down, up, down, up, down, fast. Number 13, liquidity. Liquidity is how easily you can get into and out of a stock. Number 14, trading volume. Trading volume is the number of shares being traded each day, a factor that has huge implications for a stock's liquidity. Going long. I was a bit surprised to learn about this one because I had never heard of it before. So you're betting that this company's stock will increase in price so that you can buy low and sell high. That's going long. I don't like to do that. It seems risky for me. So averaging down. I think that's number 16. So averaging down is when an investor buys more of a stock as the price goes down. This results in a decrease of average price at which the investor purchased the stock. Number 17, I think. Number 17 is capitalization. So market capitalization refers to what the market thinks a company's value is. Again, I'm not going to go into depth of any of these. If you want me to go into depth on any of these terms, please, 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 guys, let me know in the comments below. I would be really happy to do them for you. So number 18, public float. So this is the number of shares that you can actually trade once shares like insiders, like companies, C-suite, and early investors control are subtracted. We'll learn about this later. Authorized shares. That's number 19, I think. Maybe, I don't know. Yeah, 19. So authorized shares, this is the total number of shares that a company can trade. It's always bigger than the public float. And IPO, that's number 20. So as IPO is an initial price offering, it stands for initial price offering, which happens when a private company becomes a publicly traded company in order to raise money. Do you guys remember I did a video on IPOE, the SPAC merger, Social Heliosophia Holdings? Do you guys remember that? Well, that's an IPO. It became a publicly traded company. I'll leave that in the description box if you want to see it. And this is number 21, secondary offering. So a company's stock is doing well. They may do another offering in order to sell more stock and raise more money, which I think is smart. Blue chip stocks, number 22. These are the large industry-leading companies offering stable dividend payments. Number 23, Forex. Forex or foreign exchange involves trading different currencies. That's basically it. I don't think you will need to worry about that. So what number are we at again? Let's just leave it. Hedge funds or mutual funds, example ARK Invest. You guys have heard about me talking about that by now. So hedge funds and mutual funds are two different types of investment accounts that you can buy into. They turn around and invest your money into dozens, hundreds, or even thousands of stocks. Cue ARK Invest, Cathie Woods. The next term is ETFs. So ETFs are exchange traded funds. They're like stocks because you buy and you sell shares, but they're also like mutual funds because they like track as an index. Okay, so now ADRs. So ADRs stand for American Depository Receipts for foreign companies that trade in the US. Another one of these terms is called beta. So beta is a measurement of the relationship between the price of a stock and the movement of the whole market. If a stock XYZ, say that's the ticker symbol, has a beta of 1.5, that means that for like every 1 point move in the market, stock XYZ moves like 1.5 points and vice versa, you know. Okay, broker. I'm sure you probably all heard of this one. So a broker is a person who buys or sells an investment for you in exchange for a fee. Day trading. So I don't like to do day trading a lot, and I'll tell you why. So the practice of buying and selling within the same trading day for the close of the market on that day, that's day trading. That's day trading. I don't like it because I feel that it's risky, and I find it risky. I do like long-term investment, which I'll tell you later what that is. So next one is dividend. This is a portion of a company's earnings that is paid to shareholders, the people that own that company's stock on like a quarterly or annual basis. It's pretty fun. Like even if like a stock goes down, you still get money, which is good. The next one is exchange. So an exchange is a place in which different investments are traded. The most well-known in the United States are the New York Stock Exchange and the NASDAQ. The New York Stock Exchange is also NYSE. You can just Google it. Okay, so another one is execution. So when an order to buy or sell has been completed, If you put an order to sell 100 shares, for example, that means all 100 shares have been sold. So that's like execution of an order for you to buy or sell shares. So for margin, another term is margin. So a margin account lets a person borrow money, take out a loan from a broker to purchase an investment. The difference between the amount of loan and the price of the securities is called the margin. So moving average, another one, is a stock's average price per share during a specific period of time. Some time frames, for example, like 50 to 200 day moving averages. Okay, this one's really interesting. It's portfolio. So a collection of investments owned by an investor. And that's what it's like, a collection of investments that you've done. Okay, yet another one that I'm going to tell you guys about is quote. So quote is information on a stock's latest trading price. You can find that on Google or Yahoo Finance. And this is sometimes delayed by 20 minutes unless you are like actually using an actual broker trading platform, which I think it's easier for you to just buy yourself or just use Ameritrade or Webull. Okay, another one of the last ones that we have is rally. So rally is a rapid increase in the general price level of the market or on the price of an individual stock. And the next one is like sector. So sector is a group of stocks that are in the same business. So for example, my previous video that I uploaded just recently, we talked about space stocks. So that's the same sector. So an example would be the technology sector, including companies like Apple and Microsoft, Okay, so another thing is a stock symbol or ticker symbol that you need to know is it's a 1 to 3 character, sometimes even 4. It's an alphabetic root symbol that represents a publicly traded company on a stock exchange. So for example, Apple's ticker symbol will be APPL. We know this because I probably said ticker symbol like multiple times in my videos. And the last one, number 40 that we have, is yield. So this refers to the measure of the return on investment that is received from the payment of the dividend. So you get like the investment returns after you get paid by your dividend. So that's all for today, guys. Thank you for watching this video. And please, guys, let me know if you want any other additional videos on these terms that I can explain in depth to you guys. And thank you for watching this video. Be sure to like, comment, subscribe. Please, guys, this helps me a lot, and this helps us as a community and as a family. So thank you so much. Have a great day.